Yo, by the way, where do you guys upload the clips that we record?
So currently, we just send them directly to you. We just have them send them directly to you. But what we're gonna do is that once we get basically the new membership going, we're gonna have a private YouTube channel where it's like for members only, and then only like people who are in the Ghost Sniper community to be able to view that content that's coming out. So it will be that only us in the community can view those. So we'll be uploading basically all of the videos that we've done, from all of the years, because we just send them to people individually so that they can have that yeah, that content on them. So now we're just gonna end up uploading because once we're done with the session, I send them to you directly. You see, because it's like our
Oh,
personal
good,
one.
good.
So yeah, we're also gonna start uploading it on the on the website as well, on the Cold Snapper website.
All right, all right, all right. I don't know if you still have like some of the sessions we had, like the last financials session we had. If you don't mind, please send it to me.
Okay, yeah, definitely will do. We'll send out. I'll look through it. I'll look for it because it should be in our folder.
Mm-hmm. All right, all right,
So okay, I'll send it to you same time as I send you this one.
no way.
So on this one that we're back testing, we're gonna still do our same parameters. So I put it on a 30-minute chart so that placing these parameters can be much better. So also when I do this strategy, just to make it much easier, since we're living in like South Africa, I don't want you to go take other people's time zones. It might start, getting a bit confusing, um, especially since you don't want to use two different time zones. You want to use a time zone that you are fairly comfortable with, and fairly fairly understand. So just always take it to Johannesburg +2 for much better like experience and putting boundaries. So we're gonna take this, put it at 1, which is when the Asians start in, and then you have to put another parameter by 8:30, which is where your London is. So you have to mark your London. And then after that, you know that the New York are there till 6:30, 4:30, I mean, and then just mark out 4:30 line. And then when the New York session ends, which is actual 12, have a 1 hour gap between the Asians. You see that? So now that we have mapped it out properly on the 30-minute, we know basically what our strategy is. So if you can remember, I sent basically it's like a schematic. It's basically a textbook setup on how NAS usually plays out, which is between you leave a gap between the two, between the open and the New York low and the London low or London high. So there's usually gonna be a small ratio between either two. You see, so for example, if the London low opens up, if the London opens up and then it goes to create the low first, and then the low happens to be just a few pips down uh, just give me a moment, just a few pips down from where the open is, then we're gonna look for the liquidity to be created on the upside. So let me just type this quick.
Yeah, and vice versa, right?
Yes, and vice versa. So you will end up having to it will actually show you where and how the high is going to be created, other than you in instance waiting for it to be created. You can kind of see how it's going to be created, and you can even take that London trade, because there's always two trades that are shown, which is going to be the London trade, and usually the London trade is to create the liquidity, and then you're going to have the New York trade, which is that trade that takes out all the liquidity that was created. You see, so
Mhm.
right here we're gonna place where our open is. So our open is here. So the open will usually be seen as the median. It's like the median of the trade, just like your middle reference. And then yeah, your two outmost boundaries. So you can see the lows here. That's the low. And then we have the London high. And in this situation, you can see that the London high was in an order block as well, which basically gives more confluence to the entry. So as you can see there, the it opened up through the London, and then we had a double top here and a huge rush candle coming down. So as it was coming down here, it pinned here, and then this is where it showed us the low. So this aggressive move going down showed us the low. And then we can see that there's a small gap between the low and the open compared to this high. So if you can see there's this gap here, and they pulled it down. It passed the median pin down to create the low. And then as you can see that there's a short distance between the low and the high, the low and the open compared to the distance between the open and the high. You see, so it shows you that most of the liquidity that's brought into this market is being brought in on the upside. So the liquidity is being created mostly on the buy side. So if I just pull out that schematic, uh, okay, maybe. Okay, do you see the schematic?
Yeah, yeah, yeah. I see it. I see it.
Yeah, so you see this basically how NAS functions up. You see, so if the low and the open are very in close proximity, then you know that the high will have the bigger gap, because there always has to be the biggest gap between either two. You see, so once that is created, and then we have these two gaps, we know that most of the liquidity is being created on the upside. You see, so once it's being created on the upside, we know that most likely we'll have a situation where the London high is the first one to get taken out in this point. So you can always see the low, and then the low will be your trade to take, and that will be your London trade, basically catching it off the low. You see, after this aggressive pull here, it would have been your low, but most of the time it will be a retailer's move, So you have to be careful when you enter in that. So it's going to move very volatile in an upward and downward direction. As you can see, there's a lot of zigzags. So this is the liquidity line here that is being created. So here's our cash.
I said, the screen is still on the schematic.
Oh, is it still on the schematic?
Yeah.
Okay. So yeah, you get the idea of that, right?
Yeah, yeah, yeah.
Okay, so now, as you can see, these two gaps would have taken our London trade here. So always on NASDAQ, there's always two opportunities that are shown, which is during the London and during the New York. And the London plays this role of bringing in the liquidity. So in this, when you're going in on the London, you should know that you're going in with the liquidity. So it's still not a bad thing to go in with the liquidity. You can still make profits off it. But then you should have a very tight stop loss to take profit as well. Because once the New Yorks come in, it's always mayhem and it's always chaos. So as you can see from here, once once it came up, and then this is at 3:30 at 4:30. So you should know that the London always the New York always reacts fast. So that's why when it's about to become a New York session, we always like remind everybody that okay, the New York session is coming because you can get a reaction like immediately as soon as the New York comes because usually they pull the price close to where either the high or either the low is, and then it's just up to a price action and it's up to a young formation happening. So once it came out, the market opened up, it pulled down, it certified our London high, and then pulled back up. So trapping the other traders here, and then it pulled back. So those who would have caught it late would have gotten chopped out by this movement here because they did not wait for the high to get taken out. As it came in and moved out, and the high got taken out. See
Mm.
that? So once the high got taken out, that would have been on our entry day. This would have basically been our entry right there on the high. And then we would have taken that. Our risk to reward ratio would have been from that point till our low. You see, would have just taken profit by our low. And then because that's you just gotta pay quite close attention to the rules basically. So you shouldn't be greedy and try to hold on for whenever and whenever. So these are our parameters. Your first TP will be it hitting the open. The London Open is always your first TP. Your London low or vice versa to your London high should be a second TP, and then you jump out of the market. You can still hold the trade if you feel confident about it and everything. But this is where you should close your trade. See, so invertly, the formation that we are seeing here, it's basically called the bad formation. Uh, and I remember I did go through the bad formation with you on like one of our first sessions. Then formations was one of those, a head and shoulder double top, and it should have been the bad formation. And so once it came down and ripped, how the bad formation works is that you have the wing, which is your liquidity pool, your left wing, and then your left your left wing, and then you get your arc here, which will be your head. And then they'll basically use this to collect all of the liquidity that was created on the wing. And then they will expand the market basically expand the liquidity that is below, expand the liquidity that is below, and take out some of the guys that are still holding these trades. Because I bet you there was still some people that were sleeping here, and then they rushed the price back up. So this is a whole volatility chain in order to bring it back to the bring it back to this order block. So right now, what we're looking at is actually another opportunity here within the market. It's another opportunity. So let me just give me a moment. Let me jump in on this one. Okay, so I basically came in around about here. So my risk to reward ratio is going to be above this order block. Since I know the high is already taken out, there's no liquidity there. And then I'll be looking to take my profit, my first profit here, and then looking for the price to retest this area here, this order block here. You see this order block. So at the end of the day, I'll just see how it goes because it's about to close either way. So on my prediction, I'm predicting that the Asians will basically rush the price to that order block, rush the price to that order block. But for now, this is a nice setup. As you can see, it retested the order block, volatility from both sides, liquidity was taken out on the wing. There was an expansion here on the bottom, and there was aggressive pull, and now the momentum has changed. The momentum is currently changing. So all of this momentum was just to come and uh, just retest this area, collect some more orders, and then it will change. So this is going to be a sneaky one, which is going to happen throughout the Asian session. So I'll basically be on this just until midnight, see how it goes, and then I'll wake up with it, and then I'll see where it's at. So I'll just place my risk. Yeah, I place my risk above there. So on my entries, I didn't place a stop loss. I just like looking at it, so that like a psychological stop loss, so that because I know where I want to jump out, and I'll take my loss if I have to. But at this point, we're still going with this. So as you can see, I've basically mixed the ICT with the SMC because then I was basically trading the intercycle trading, which is the time frame based on the liquidity created on this trade here. If I were to take it, if I did take it, but then as it comes back, now I'm trading the smart money concept with the formations and basically reading the order block, the same as this one, as I read the order block and it put the high. And then I know it's another confirmation that this liquidity here was taken out. So there's no way this market can come back on this level, you see. So if I try to expand, you'll see that, yeah, there's no liquidity line here. So the only liquidity is on this order block, and the market did not have enough capital to make it to that area. So we are just taking our bid on this side and watching to take our first TP here. So basically, with these boundaries, this is how we're able to see our boundaries and where our entry points are at. How we can basically enter with the minimals of risk, knowing that our ratios are going to be good, you see. So even on this level, we've been getting we gotten two rejections basically on this level. We gotten two rejections. So at this point, there is an order here. There's an order as well on this low here, which can be validated depending on the momentum. You see, which is by where this low is at. So this basically left the order here. So this is where the low at. So we can also predict that the market might just be satisfied at this level, and then it was just retracing off of this movement just to build some more momentum to come collect this order block here. So this order block is still valid and is still liquid, very much liquid. So at this point, we will just have to wait and see how the trade plays out, and then yeah, we'll get to collect. But I reckon that we might have entered on the retail side. It's still no problem because there's still liquidity. There's still liquidity there. So by the time it's about the London session, our TPs should have hit by then. Yeah, so oh, sorry about that. London session 8:30. So yeah, around about 8:30, we will basically just want to close because we're currently entering into a new market. So it's always better to close when you enter into a new session. So mixing this also with fundamentals helps out a lot, which is how we are able to catch basically our NASs and our CPIs that we trade. So also gonna have NFP, I think by next week. Next week as well, we're gonna have NFP. So hopefully you'll be able to join us on one of the NFPs. So yeah, we can just break some bank. See that.
Yeah, yeah, no, definitely. Cause I'm almost done with my fast, so yeah, I'll definitely be joining you guys.
Oh yeah, no, that's beautiful. That's beautiful, bro. So I don't know which pair do you find fond of in the financials, or you haven't stuck your toe in there that much?
Nah, no cap. I haven't really like stuck my toe in there, but like I carved was it NSD and USD? think it was like yeah,
Oh
cause
yeah,
I like yeah I like the way it moves. It's like kind of textbook in a way.
yeah. NSD USD to like your GBP USD is always
Yeah.
is always a good pair. Any major pay because that's part of a major pay. So basically, yeah, a major pay is basically a pay which is paired up with like a major economy. So, for example, your USD, uh, your NZD USD, GBP USD, your Euro USD. Will be considered as like your major pays because they're part of like major economies, you see, and then
Mm-hmm.
you have your basically your minor pairs, which will be like pairs that are not against like the US, that don't have the US involved in them. Well, some of them, if the US is against, let's say like a smaller currency, so basically USD ZAR is a minor pair. You see your USD PNL, your USD Tri, which is the Turkish lira, is like a minor pairs. And then you would
Mm-hmm.
have your exotic pairs, which are like pairs that are very exotic. So that will be like your AUD JPY, you know, uh your ZAR to IRN, which is like South Africa versus the Indian ruble and stuff like that. So when
Mm,
you go for major pairs have a better spread because they're more smooth, they're more like intertwined, and they have proper liquidity coming in and out, and the volatility there is actually nice and smooth, and yeah, there's much more benefits than to trading a major pair, you see. So also another one which is nice, and I see if you've seen the signals that we also send USD chip, which is USD versus the Swiss franc, basically, is
mm,
is one of yeah is one of the smoothest the smoothest ones you find as well, because it respects a lot as well. So respects a lot of fundamentals. It respects a lot of it respects a lot of technicals as well. So it's also intertwined as well. So it's also a pair you should look into. As you can see, there's even a liquidity line that's been built up on the other side, and it says just slightly inflated above this order block. So if we just try to look closely, just try and see the widespread of it, we have a nice little order here. Yeah, nice order. See shift. So yeah, this is what I said. This is also one of the smoothest currency pairs you can ever trade. So as you can see, we have a lot of liquidity that was built down on this side, on this downward side.
yeah, yes, yeah.
So now you already know that if we pull into our arsenal of strategies, basically, you know the third touch strategy, which is first touch, second touch, third touch on the trend, we get an expansion to about the premium or the discount. So for the major maximum entry, this will basically be like your point for that nice entry. So you should also check out USD Shift. It's pretty much a nice pay. I won't lie. So on this one, we'll probably just check it out tomorrow. It would be lovely if we can get on another session also tomorrow, just to keep things kicking as well. So here we're just using straight SMC. I wouldn't recommend for you to use the ICT on this market specifically, because that one usually just works for like your major indices, your American indices, to some of your American stocks. So as you can see, the price is still rushing from this third touch, so we're not gonna touch it. It will definitely invalidate this order block. But we'll just see
Mm,
from the morning what's going to happen. We could just get a slight retracement from here, and then just have a kick up to this lovely order block here. See that? Okay, bro. So I think we're left to like 3 minutes on this Zoom.
yeah, yeah.
Uh, so is there maybe any questions you wanted to ask, or anything you want us to get into?
No, no, not yet. But like, I'm good for now. So what you saying? Like for USD Chef, like you recommend the ICT,
No. I wouldn't necessarily
SMT.
recommend the ICT on the USD shift, as because it's well, Sydney, there's a market between Sydney, which is gonna become Sydney, London session, and then the New York session. You see.
Mm-hmm.
So uh having to backtest it will mean that we have to shift around a few things and all of that. So it won't be as 100%, it won't be as 100% then when you're using it for
Yeah.
mass. So I would say for this, it should be just straight technical and straight technical fundamental and basically SMC, which is your smart money concept,
Mm-hmm.
just knowing where the order
Yeah.
block is and where the zone is at, and knowing where your entry point is, basically your entry level, specifically.
Okay. Now I just wanted you to repeat that part because no cut that when you're still explaining it.
Oh, okay, no, sorry about that. Sorry about this.
It's
Network
okay.
here. I think I might actually be getting load shedding at 12, so I think that's why the network is.
Yeah. Nah. Same. Same. Oh yeah, dog. Also, when did you say you need me to take pictures?
Oh yeah, when is it gonna be? We first have to go to because we were gonna go to TD Market. When we go to TD Market, so I was actually gonna ask you on your schedule because we're trying to find a better time for you as well
Mm.
and for everybody. So I don't know, which day do you think?
Like I don't know what you if you guys are comfortable with Saturdays or not.
Because I think Saturdays they usually close on a
Okay.
Saturday. Yeah, they usually close on a Saturday, but we can check with them if they are if they can be able to be there on a Saturday. We'll just have to inquire and ask. But you say like on your Saturdays you free, you good.
Yeah, Saturdays I'm definitely free. I'm also free on Thursdays, but it's also subjective, because I might have some work stuff to do.
Oh,
Yeah, because like ideally my off day is on a Thursday.